This was resistance back during the bear market, last bear market. When it broke, this became some type of support. It did break briefly here and during the flash crash lows, but it looks like Link, if it breaks back down into this channel, could head towards the lower third, maybe around $6 or so. XRP, I think that this goes down to 50 cents. So maybe this is a little bit of support down here at $1.25, but I think it goes down to 50 or 60 cents. And I could just go down the list here. Tau, look, the line in the sand for Tau is 170. So that was an important level of support once, twice, and we're getting close to it. So if that gets tested a third time, well, maybe it breaks this time. So I would actually think about picking up Tau at $90. Take a look at Aave real quick before we pause for a moment. So Aave, look at this trend line support. This is long-term trend line support for Aave. And if this does not hold, if this fails, then Aave could go from $120 to $80 in a hurry. So this is important long-term trend line support for Aave. And Aave actually makes it into this total DeFi chart. So total DeFi market cap is mostly like protocol and governance tokens on EVM chains. So think Ethereum altcoins. And this is sitting at support too. So if this were to fail, I think that you see the entire space just move lower by at least another 20 percentage points. I think maybe the stock market will kick off the correction if it comes, and could be an interesting opportunity on the short side for all of those alts and Bitcoin and ETH too. I'm going to pause there for a second. What do you guys think? Anything that you maybe see differently than I do? Anything that maybe you're thinking about buying? Looking for a contrarian opinion here. Thanks, Dan. I'll see you, man. Alrighty. No contrarian opinions. Everyone just thinks exactly what I think, and that is great.
One thing that I'm checking right now, David, and if you could take a look, it seems that some of the pools are getting back to some volume. I just checked on vfat.io and I ranked by TVL. And if you could take a look at that to tell me what's your take on it. But it seems, I remember that like volume just last week or 2 weeks ago was just not there at all. But I don't know, maybe it was just something short. If you put it by TVL.
Okay, got it. So you want me to sort here by
Yeah,
TVL?
by TVL. Yeah, that's just something I was looking at right now.
Yeah, so here's the thing. Now that we know that the implied volatility in the pool is driven mainly by volume and active TVL, and the vast majority of pools do not have an implied volatility in the pool that is greater than the realized volatility for the assets in the pool external to the pool. What that means is the vast majority of these pools don't have a positive variance risk premium, which means that you shouldn't enter them at all for the vast majority of these pools, because you're just not likely to be structurally profitable here. And you would probably do better just holding rather than being in the pool. So yeah, even with
and I was thinking this within a strategy, like you were executing, like having that and hedging, like the ETH side.
I don't believe that works. The thing for me is, I think that looking back on it, that I was actually just basically making myself the yield by having the short position and the CLP paired with a stable, like ETH paired with a stable, and then that short position up above. That short position was forcing me to realize that divergence loss on the way up. And the yield in the pool was not great enough to overcome that cost of volatility, that gamma, that impermanent loss. So if my fees are not greater than my IL, then I'm
Yes.
not profitable. It doesn't matter whether I've got a hedge or not. And so I think that the vast majority of these pools are simply not structurally profitable. Now, here's how you can get to profitability in these pools. You need both of the assets to be extremely positively correlated. because
Right.
when,
Maybe a pool like ETH and a derivative of ETH or Bitcoin or and a derivative of Bitcoin. Do you think
yes,
that could work? Because I remember
yes,
you were experimenting
I
this with
do.
gold.
I do believe that that works because, and here's why. If you don't have any divergence, or if you have very, very little divergence, then it becomes much more likely that your fees will be greater than that divergence. So if I'm in a pool like this one, let me see if I can bring it up here on VFAT, since I don't really use VFAT all that often, PaxG XAUT. So I'm
Yeah.
in this pool with a very, very, very narrow fee tier there, 1 basis point wide. And in that pool, because both tokens in the pool are the same thing, they're both gold and they both stay extremely tightly, like the peg is very, very good for both of them. That means that I have very little gamma. So my gamma is my cost of volatility. That is my impermanent loss. So if I have essentially zero gamma or very little gamma, then that means all the fees that I earn are profit. Now,
Which
if
is the
I
case. You have very little gamma or pretty much non-existent gamma from what you're saying.
exactly, exactly.
Yeah.
And so if I've got no gamma, then that means my theta, my fees, is profit. And then if I can
Which is
hedge
50% APR. What we see
well,
there. I don't know.
yeah, so it's actually I'm actually earning a little bit more than this.
Look at that.
Um,
Yeah.
so here's the thing though. If I know that I have essentially zero gamma, but my theta is 50% fee APR, then all I've got to do is hedge my deltas. So if I hedge away my deltas and now I'm delta neutral and I have no gamma, then my theta plus the funding rate of my short, that becomes my profit on the position. And so that's what I've been farming. And it's been doing like 200%, like since last Thursday.
And there might
So
be some positive funding rate as well.
that's the whole point. Yeah. So the
Right.
funding rate has actually been greater than the fee APR on the pool.
Look at that.
Yeah.
Yeah.
Yeah. So,
Good
that's been
stuff.
working extremely well, extremely well. But here's the risk though, Paulo. The risk is that the funding rate goes negative and remains negative and also becomes more negative than whatever I'm earning on the pool. So if the pool fee APR stays at 50%, but the funding rate becomes negative 100%, then that strategy would be a loser. I'd be losing 50% on that strategy. Now, over a
And
long period
David,
of
even
time, but
though
yeah.
I know that is a risk, and of course that the risk is there, but from your experience, from what you've been watching, it seems that there would be a little bit of time to say, okay, that's changed. I might need to adapt.
Yes, that is true. And there have been brief periods of time since last Thursday where on GMX, the funding rate in the XAUT market has been, or the XAU market has been negative, but for very, very brief periods of time. And so, I'm accruing funding yield on GMX. And, if I think about this a lot, like I would love to be able to hedge that funding rate risk on GMX or on any perp stacks that I can trade gold on. So if there was a market on Boros, an interest rate swap market on Boros that would allow me to hedge that funding rate risk on, let's say, Hyperliquid, then I would probably migrate at least 50% of the short leg over to Hyperliquid just so that I could hedge away that funding rate risk. Because if I can hedge away that funding rate risk, then I've essentially got like three protocols. I would create a custom Uniswap v4 pool for PaxG and XAUT. So that would be leg one. Leg two would be either GMX and or Hyperliquid. So that would be leg two. And then the third part would be Boros, just hedging the funding. So that could be wrapped into a token. And you could call that token GUSD for gold dollars. And it's
And
essentially
at
just
that
like,
point, when you
yeah,
put all of that together, you
right.
have your main concern would be like counterparty risk and not like funding rate or directional risk,
Yeah, I mean, smart contract risk. Yeah,
smart contract
basically.
risk.
Yeah, so that's just an idea that's been rattling around in my head here, but I can't hedge the funding rate though. That product doesn't exist yet. So, but this trade though, Paulo, this has been working extremely well, because this LP with the tiny 1 basis point wide fee tier, this thing trades like spot. It's basically spot that is paying 50%. That's basically what this is.
That's
So
pretty cool.
it's really cool. Yeah. It's basically like owning gold and getting paid
With a
50% to
yield.
own
Yeah.
gold. Right. Right. How cool is that, man? And
Yeah, that's DeFi.
you could actually, if you're looking over here at, maybe pools, and then instead of taking a look at the gold markets, if I just sort by TVL, I don't think that Bitcoin and ETH are tightly correlated enough for the
Yeah, that's
gamma.
not a no-go for me.